In order to succeed, you must fail so that you know what not to do the next time. Anthony J. D'Angelo. I love that quote. Always remember, when you have a trade that does not work, it is a prime opportunity for learning what you did wrong, how you can do it better. And remember, the market doesn't always move in the direction that it appears it is going to move. Even your best efforts can be thwarted by strange things that happen in the market. If this all worked like clockwork, then monkeys could do it. Then you could have computers programmed to do it. We are trend followers most of the time, and you can look at our charts, particularly at the weekly chart. You can see over and over again how accurate these weekly vertical crossovers tend to be time and time again. However, they don't always work. So what do? You learn from your mistakes. You learn how to minimize losses, how to maximize profits. We want you to practice trade with us day in and day out. Hope all of you and appreciate all the great feedback from the options training, that 3-part series we put out. We'll be putting that out again, but again, in order to get any of our trainings, you have to be signed up. The only way you do that is go to chartingwealth.com, put in your name and email address. You'll receive all the great stuff we have for you. Great training today. The Trend is Your Friend. It's an excerpt from Chapter 6 of our book, Charting Your Way to Wealth. There's a link in the show notes. Whether you're listening to us on YouTube, you get the email, or your iTunes, however you might be listening, whether audio or video, you'll see a link there. And we want you to follow that link to purchase the book, Charting Your Way to Wealth. Also, there in the show notes are links to the free PDFs, Daily Market Worksheet, Weekly Market Worksheet, and Trade Worksheet. I want you to practice trade constantly, as often as the opportunity presents itself. What do we see going on in the market? Stocks down again, bonds way up, gold up also quite nicely. Let's jump first into the market, see what we have going on. Now again, after 7 weeks overall, 4 weeks after the weekly vertical crossover going up, we have a week with a pullback that appears to be underway. Now we're only 2 days in, but we can see that this week started off both penetrating the 2-day and the weekly trend lines on this weekly chart. Price percent oscillators heading down, derivative oscillators losing momentum. What do we have forming? Appears to be almost a doji. Lots of indecision. It's red, tending down. We go from the 2-day chart, from the weekly to the 2-day chart. And of course, this latest 2-day chart represents Monday and Tuesday. It is a red down candle. It does have a wick on top, more of a spinning top with a long wick on the bottom, getting close to crossing over, going down. Hasn't happened yet. Derivative oscillator also, when I say crossing down, that's the price percent oscillator. Derivative oscillator also losing lots of momentum. Prices pushed through the 2-day trend line, still above the weekly on that 2-day chart. We go to the 4-hour chart. What do we see there? We see price pushing through the 2-day trend line and the weekly in the morning on Tuesday, recovering up a little bit in the afternoon. But again, we do see that price continuing down. Price percent oscillator gaining downward momentum. Derivative oscillator gaining downward momentum. Well, price percent oscillator still heading down. Not as steep as it had been in the morning and the afternoon, but much steeper than the prior day. Derivative oscillator gaining downward momentum. So we'll continue to watch, wait, see what there is to see. Now, if there is a big bump up and a recovery in the morning, remember, don't have a crossover yet going down. So that does mean that the 2-day and the weekly are still in confirmed up moves. That can change over the next 2 days, but not yet. So continue, keep your powder dry, pay attention. Going to go back to the weekly chart. Go to the Qs. Oh, by the way, S&P 500 down 0.68%. The Qs, the NASDAQ 100, the tech stocks down 0.78%. We see we have a red spinning top appears to be forming. Indecision tending down. Price percent oscillator heading down. Price, of course, is blown through both the 2-day and the weekly trend lines on the weekly chart. Derivative oscillator losing momentum. Go to the 2-day chart. What do we see there? Again, we see a down candle pushing through these 2 days, Monday and Tuesday, push through both the 2-day trend line and the weekly trend line, trying to cross over, not quite crossed over going down. Once it does at the end of the next 2 days, if that's what happens, we will of course change our 2-day crossover over to that next candle, but we're not going to do it yet. Just a bit premature. Now we go from the 2-day to the 4-hour. Lots of down movement in the morning. We can see where things penetrated through the 2-day trend line Monday afternoon and then penetrating the weekly trend line Tuesday morning. We see that the price percent oscillator is heading down, derivative oscillator gaining downward momentum. So again, another down day for stocks. We'll continue to watch, see what there is to see, what these charts guide us to do. But I'm telling you, we had a sweet run for 4 weeks on the Qs. I'm sorry, 5 weeks on the Qs, 4 weeks on the S&P 500. Now we're going to go to bonds, up for the day 2.1%. Crazy big up day for bonds. Now bonds over the prior 2 weeks had been going up. What do we see so far this week? Even with that big run up, we have an open box red candle, long wick on the top, wick on the bottom. Prices above the 2-day trend line. Price percent oscillator still negative on the weekly chart. It is flat. Derivative oscillator has been losing momentum since it topped all the way back on the 25th of October. And again, just waiting to see how things sort out. Weekly still in a confirmed down move. Don't know that that's going to cross over going up for the weeks out. It could. The 2-day chart crossed over going up back on the 21st, November the 21st, and then started moving down. We saw things peak on Wednesday of last week. Thursday and Friday, red spinning top, open box, which again is sort of a slowdown in the up movement. And then this latest one with this solid red spinning top, indecision, tending down. We still have the price percent oscillator moving up. Price has crossed through in this latest 2-day candle, crossed through the 2-day trend line, still above the weekly. And again, remember, weekly's confirmed down, 2 days confirmed up. So we'll just sort of see how things sort out. Where you're going to really see the movement from today is in these 4-hour candles. Most all the movement was captured in the morning. We see that wick topping off at a higher, well, let's see. It topped off at a high of 141.70. In the afternoon, a little bit higher. Okay, topped off a little bit higher, 141.77 by 7 cents. Price percent oscillator is not crossed over going up yet. We had that big down move on Monday morning, so it just hasn't recovered enough energy to cross over going up. So again, bonds a bit schizophrenic, weekly down, 2-day up. We'll just wait and see how bonds sort themselves out, but a big up day in bonds. So continue to watch, see what there is to see. Gold, of course, as we see the week starting off now, we've got a green spinning top, indecision tending up, price pushing through the 2-day trend line that was going down. And again, these markets are roiling all over the place. Price percent oscillator still negative, heading down. Derivative oscillator just started losing downward momentum this week. We go from the weekly to the 2-day. We look at the 2-day chart. It's still not crossed over going up. It's heading up. Derivative oscillator still negative, but losing downward momentum since it peaked. Going down, it's downward. We call that a peak, a trough, I guess, on Friday the 15th of November. We have a green spinning top, little wick on the bottom, large wick on the top. Price is between the 2-day trend line, which it's penetrated, and below the weekly trend line. Now remember, the long-term on trend is on gold. The long-term on gold, the long-term trend on gold is down. The intermediate term trend, that is the 2-day chart, is down. And the 4-hour chart is not yet crossed over going up. So watch, see what happens with gold. If gold reverts over and really starts hammering down, the long-term trend is still down. So is the intermediate. So you could have the possibility in a reversion of potentially jumping into a down move in gold. So again, that's where we are on the 2-day. Now, watching this 4-hour chart is where we really see all the up movement in the morning, and then in the afternoon actually not getting as high. So that 2-day chart still confirmed down, weekly still confirmed down, 4 hours up. If you see that rotate over, that's what can give you the opportunity for potentially jumping into a down move if that reversion occurs. So just watch. May happen, may not happen. If it does happen and gold starts losing a lot of power, which it may very well not. It's penetrated in the last day and a half, pushed through the 2-day and the weekly. That may be enough energy that it'll just keep going up. But watch it. Be aware. Folks, that's where we are as we end the day on Tuesday, go into Wednesday. And remember, what do we do on Wednesday? At the end of the day on Wednesday, we go to our weekly charts. We sit back, clear our minds, and see what the big charts are telling us. At the close of the day on Wednesday, that's what we talk about. In fact, I'm probably going to put that training back up again about pushing back midweek and seeing what's really going on, because the big money in your practice trades is always on the bigger charts. Dollars, tens of dollars, hundreds of dollars in your practice trades, not pennies in short-term anomalies. We're looking for weekly vertical crossovers. We're looking for understanding what the major trends are. They're a lot easier to follow too, just a little inside hint. So again, practice trade as often as you can. What we teach you here, you can adopt to the stocks and ETFs that you're interested in over and beyond the ones that we follow. I want you to practice, practice, practice. Put to use what you learn here in all of your practice trades. We love to hear from you. You hadn't purchased the book, please do so. We do have a special question and answer training live call-in for our Patreon members coming up next Wednesday. We want you with us. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters.